Daniel Hussey Jr. How are you?
How's it going,
Well,
Dale?
good. Welcome back.
Thank you. Thanks for having me back on.
Oh, it's great to have you. Top of mind for you, Daniel. What are you thinking?
Well, why don't we start with the S&P here today? But we're
Yeah,
also, in the midst of crop tour here. So a big week for row crops, corn and beans, going to be looking out for that pro farmer number, giving us some
yeah.
insight onto the in-field right data as to how the crop is coming along. But I heard you mention there that S&P, don't be a buyer till around 4,200. Man, you're like taking words out of my mouth here. I can't disagree with that sentiment. I'll throw up some charts here, but let's begin with that
It's
S&P.
it's interesting now. I have an interest in the grains, and I've been waiting for the wheat to come out of here for a while, and
Yeah,
the beans still seem to have the most constructive technical pattern. And isn't it true, Daniel, that the bean crop is made in August?
it
So,
is.
okay,
It is. And
so
and rain makes grain, right? And
yeah,
I actually have prepared here a couple of weather forecasts that we can look at. What the heck? Why don't we start here since we're
all
on the
right,
topic anyway? 6 to 10 days out, look at that big below average rain forecast for the Midwest.
yeah,
That to me suggests, right, rain makes grain. Well, the lack of rain means if beans are made in August and there's no rain in August, well, the pretty good bean counts, in other words, pod counts. The field analysts out on the crop tour right now are going around field by field and taking data assessments and literally counting the number of pods on each plant. Well, the plants look pretty good from the road. They had a good recovery here over the last several weeks. We got some good rain
yeah.
into the end of July there to kind of save us and pull us out of what was otherwise very big drought conditions. But you can see over the next 2 weeks, there's really no hope for rain in the forecast for anywhere from Texas up to Canada and through the Great Lakes region here. That, coupled with, what are going to be basically above average temperatures as well for August, the dog days of
Yeah.
summer are here. And, soybeans might have a struggle to make a crop here. Like you mentioned, I agree. Soybeans are the most constructive out of our row crops.
Yeah.
The new crop contract, which is the chart we're
Novies.
looking at, the Novi here, we're above all of our major key moving averages. And actually,
Yeah.
today's lows that we held in the overnight session, which is really indicative of, in my opinion, a trader in the Asian session, right? Being a buyer in soybeans. There's been this overnight bid that we've been watching. And to me, that suggests that our big trading partner, China, might be in here, right? Trading futures and utilizing the board alongside other means to get their fill, so to speak, of demand. But we're above that 18-day moving average, which for many commodity traders we use as kind of a short-term day trend indicator. While we're above or below, it's a good indicator of where that daily trend is heading. Breaking back above that 18-day, above that 200-day, above that 55-day, and holding them all again here as support is pretty constructive just from a reversion to the mean moving average standpoint.
Could
Then
I
as we
ask
Mhm.
could I ask about the corn, which has really been the dog, but I see divergences developing at these lows, almost a three drive to a bottom formation. Could that be the sleeper?
It
Uh,
could
you know,
be. And
okay.
and the crop tour right now, I think, is what corn is really waiting for, to see those yield numbers below what the USDA has been telling us throughout this year. We use the USDA's balance sheet, or what the USDA tells us as a benchmark for where we think the end of the year production will be. And for those not familiar with the crop cycle and row crops, they come off of the field once a year in North America. So that means all of the grain that we have for the next year will be made in November, or will be harvested in October through December. And there won't be any more grain or supply, if you will, until the following year. So that
How are
means all we have is demand.
carryovers? How,
Carryovers are tight for
okay, that
soybeans, but for
okay.
corn, we're a little bit heavy on that carryover.
I see.
Carryover in soybeans is going to be near what we refer to as pipeline if we don't get a good yield this year. Pipeline is the amount of demand we need, a number that we have to hit so that we don't literally run out of soybeans on hand. And we're down to about 200 to 300 million bushels on hand soybeans year over year, which represents, a 20% stock to usage ratio. In other words, we only have about 20% of our yearly usage on hand, which is very, very tight.
Yeah.
When you consider markets like wheat usually have 40 or 50% of that usage. And I'm sorry, that stock to usage ratio is shrunk down now in soybeans down to less than 5%, excuse me. We normally have around 20%, right?
Okay.
Anyway, if the USDA number for soybeans comes in below 52 bushels an acre, which right now that crop tour is out there trying to figure out what that yield could be, we are, run the risk of, so long as demand for soybeans remains strong, we run the risk of proverbially running out still, which is why beans are still in the teens at $13, while corn has fallen below 5 again here. Because when we look at the corn crop, we got key rains right at the time when we needed them in July. We were able to get through pollination, but the corn did struggle. And now that we're getting heat into the end of that maturation cycle for corn, in other words, the crop has been made. Now it's a matter of how well can it finish. It's not finishing well. And what we're seeing in the crop tour.
It's not how you start the race, it's how you finish.
Absolutely. And what we're seeing in the crop tour, the initial numbers coming back is in places like Ohio and in South Dakota, where we witnessed good rain and a decent growing year, they have pretty good yields. But now as we're getting into some of those problem areas, eastern or western Indiana, Illinois, eastern Iowa, North Dakota, Kansas, no Kansas on this tour, but Nebraska, we're seeing those yield numbers drop significantly. And that means we might not have as much supply as the USDA was originally telling us. And if that's the case, corn showing that divergence down here.
Yeah, that's a nice formation.
Right. Yeah. And we already know that corn has the ability to rally all the way back to 560 or even 620. It was there just a couple months ago. During the summer months, during weather markets for corn, when we had a very dry and warm June. Then we got rains in July, which drove prices all the way back down to $5.
I'd even buy a bearish report. Say they sold them off one more time. I'd step in front of that. Probably with calls. But
and we're down, we're down towards historically lower levels for corn, right? We're back going down.
To me, it doesn't seem historically low. I used to trade them when they were $2.
And I guess I misspoke. What I mean is we're going back down into the old historic range lows.
Right? Back to the old highs, historic range highs.
We didn't quite have the blow off tops that we had back in 2012 when we had a real crop loss and summer months that were in the triple digits. We're going to see a little bit of that over this next week, but not enough to drive us to $8 corn. But have we sold off now in this, what has otherwise been a very inflationary market across the board?
We're at a fib level here, Daniel.
I would say we are. And that's and soybeans too. Both corn and soybeans have pulled back into big, basically 50% fibs of their major run-ups since, the 2020 COVID lows, where just everything made a major bottom to some extent, right? And then we went into that post-COVID inflationary cycle. Looking back on it, it's kind of, you look back on that 2020 through 2023 timeframe, and I wonder why it wasn't so easy just to buy everything and close your eyes because of how much money printing and debt was being introduced to the market. It was a weird time where we saw an expansion, right, in monetary policy on an unprecedented level, and now we've seen, I think, the first burst of that inflation. Well, central banks around the world obviously have all responded over this last year. And I think in the broader commodity cycle, we're also seeing, that bit of a pullback. We haven't necessarily seen the slowdown, I think, in the stock market people were expecting when interest rates rallied as they did, but certainly commodities took a halt and there was a wet blanket thrown on many markets. The wheat being a great example.
Yeah, what's holding it back is Australia having another good weather year. I've talked to grain people, and they keep getting lucky with rain, and that's what's keeping supply adequate.
That is right. They're keeping supplies adequate. We're also seeing state entities, like, for example, the Indian version of their USDA is actually dumping state stockpiles on, and this is the country of India, is dumping state stockpiles on their domestic market to try to suppress wheat prices. They've also imposed a 40% export tax on wheat. So India is no longer an exporter of wheat on the global economy, but they're also, there's this notion that other countries like China might be doing the same thing. So that's keeping, a dampening or keeping a dampener on major players or buyers, the big countries buying wheat right now. Plus you've got a good crop in Australia, and you've still got, grain that's been making its way out of the Black Sea region. The Ukraine-Russian crisis was not as big of a hiccup to the grain markets as I think many people anticipated. And, the whole run up in wheat above $8 was on the back of, right, the Ukrainian or Russian invasion of Ukraine. And then as those news headlines started to kind of get stale, we started to see a grain deal and grain make its way out of the region that we were otherwise basically pricing out of the global market there. If you took Russian and Ukrainian wheat out of the global market or out of the global market for wheat, that's how you get to $12 and $13 again, right? The market pulling back, deflating, so to speak, that inflationary run up on a wartime news headline.
Looks like oil.
Yeah, it does, right? And most of our commodities, to some extent, have this same kind of look and feel to them right now, which I believe creates longer term opportunity. But it also means that I think when you look at just the short-term ranges, for example, in wheat since June, we've got a dollar wide, $1.50 wide range that we've traded, and at times only taken a couple days to trade up and down inside of. That's pretty volatile. Some big money is being thrown around in commodities still. And I think, that volatility can create opportunity, but also creates immense risk. But like you said, options are a beautiful way of managing that risk, particularly in commodities and very volatile assets, where you can buy a put or a call, know exactly how much is exposed in terms of risk appetite, whatever you paid for it, and you give yourself all the upside of owning the underlying if it goes in the money. So it can be very beneficial for the trader for sure.
Okay, Patrick's asking about sugar. Do you have a view?
Let me see if I got sugar. I have rice and cotton that I cover a little bit closer. I'm actually looking for both of rice and cotton, and I will get to sugar here in a second, to continue these otherwise uptrends that we've been forming. Cotton trying to get back above that 18-day moving average. I think we're just could start, basing above 83. When you take a step back on cotton, we've got a big breakout, I think, that could happen here. Let's take up, let me pull up a sugar chart real quick and take a quick look at it. We've had a pretty volatile year for sugar and one heck of a run. Last time I really looked at the October sugar chart, that's right. It's consolidating here, right? Sugar goes into these, maybe $4 ranges in terms of a very larger, broader trend. Watch that 18-day moving average in sugar. It tends to be a very good daily indicator. Once we break below it, you can see how we went into that sideways chop now. And I think that $4 range in sugar from 26 to 22, reversion to the means right back into the middle of it. This is a textbook wedge of, folks forming in the sugar. So watch that trend line against the highs above 25, probably a breakout. Take a box, right? The distance of this range, $4 above 26, probably 30 towards an upside target with, if we continue this trend higher that sugar's been in of moving $4 to $10, ranging $4, and then continuing on that we've otherwise seen since 2019, 2020 lows. Probably one of the best commodity run-ups that we've seen, and one that has held on to its gains from 2020. Right. This is one of the few that has not given back 50-60% of that whole run-up. You look at everything, even lumber. Which I don't know why lumber's not coming up on this chart for me, but lumber was a great example. It was one of the first markets that ran up to 1,600 board length and then fell all the way back down to 600, right? Orange juice also in the midst of a run up right now. There is weather concerns in Florida and in Brazil and other growing regions. Pretty much nowhere that grows orange juice is doing well. In California, Florida, and in Brazil. So it's the demand for orange juice is still strong. This is a market where there's a lot of, a lot of speculation. So, and not much liquidity. So these run-ups can get very volatile. And so be very cautious, reversal here is probably.
If you don't believe what Daniel's saying, watch Trading Places and you'll see how there could be big reversals in the OJ market.
Yeah, and that's one of our favorite, kind of go-to laughabouts in our industry in commodities tradings is that movie and that scene where the OJ market has a USDA report being announced, and I feel that way with USDA reports in the grains.
Yeah,
We're always the last to know on these big news events, but they're so critical to the market and
yeah,
price discovery that they're hard to ignore. So, but soybeans being the most constructive. Okay. When you mentioned, the big 50% pullback, basically that November beans are effectively in from, their swing lows from the 2020 timeframe. And this is a chart right now, a daily chart of just the November beans. So this isn't a continuation chart, but you can see that even when we were liquid and down there, it's still a pretty good 50% pullback. The continuation
yeah.
chart looks just as well. Now, there's another 50% pullback right from this 1128 low to high. Let me flip over to that 4-hour chart so we can look at that in a little more detail, because I think we're building into this nesting against now a couple trend lines and building into these 50% ready for a breakout. And this next 2-week period for soybeans is going to make or break this idea. I don't discount, or I can't totally take out the idea that we flush one more time to the downside. There's a lot of room in this chart all the way down to, the old lows there from May for soybeans to be able to pull back and still be in a bigger range, because price discovery in row crops this time of year is very contingent on the supply and demand, conversation. How much are we making? Because we know generally how much demand there is. China always buys about the same much of soybeans. Mexico always buys about the same much corn. We know how much the ethanol and soybean crush industries use for both. We know how much the livestock industry uses for all of it, generally speaking, with some increase year over year. So we can, work out balance sheet wise how much is going to be left over. But over the next 2 weeks, you don't get rain. We get that heat. Beans are made in August, like you said. There's no rain. We
Yeah,
don't make rain. This chart could get very bullish very quickly. And
yeah,
particularly if we see now in the remainder of the tour this week, now that we're getting into Illinois and the problem spots in Iowa and Nebraska, if we don't see those pod counts, near their 3-year averages, they're much lower. If there aren't pods on the plant, it won't fill out the pod. So you're just naturally, you can cap out on yield based off of what, if you don't have a good pod count right now. So there's a lot of good information coming out over the next week on the fundamental side that can help shore up any questions we have about those balance sheets. But I'll tell you, the technical picture for soybeans right now looks really, really bullish to me.
yeah,
1130 swing low to high here, pulled back almost to the tick. 1282, 75, 50% pullback. That then gave us kind of these two trend line supports that I was watching, and one of
yeah,
them has proven itself time and time again. We have now rallied up over the last week up to fill an open gap at 1331. The market then rallied. It continued that rally after breaking out of this kind of sideways consolidation and wedge. We went
yeah.
above, this
Pulled
multi-day
back to
range
the
highs.
breakout last night.
Exactly that. And by the way, a 50% level from that 1282 swing low to that 1381 high. It was almost to the tick, 1331 and 3/4, 1332 and a half. What's a half a penny among friends there, into that level. So very technical level. We got now a pretty substantial rally, 10 cents off that low for the day. And this is a 4-hour chart. We only have a couple more hours to go in today's session, but you can see how this could very well turn into a reversal. We go above trend lines as we start to go down to and before we do, I want to point out we had an open gap on this chart. This decline was so steep and the sell-off was so nasty 2 weeks in a row. Basically on Sunday nights, we opened lower and left these gaps open. Well, we came right on up and filled both those gaps, and we hit the 618 line of that full decline. So that to me says, hey, 50% shorts where you'd expect, sellers to, put up their fight. They're unable to do so. And they're, giving up 61% of their last move. Whereas the longs, they're only giving up 50% of each pullback. So
Great
we're starting
point.
to see that building of progress, in my opinion, to the upside. We still got to break out, right? And if we get rain over the next week, this could all roll over just because of pure fundamentals. Funds can come in and smash this market lower, as producers will also run in to hedge their crop, because now all of a sudden a farmer who only thought he was going to maybe have 100,000 bushels of beans might have 125,000 bushels if he gets a rain, might have 150,000. That's the difference here in people's production numbers. And if you take that 150,000, right, or just the 100,000 for easy math, right? That 100,000 bushels of beans times $13.41 a bushel, that's a $1.3 million crop here. So we're talking, big bucks swinging around for farmers. Coffee and cotton. I saw a question come in there. Yeah, let me quickly wrap.
From Richard.
Absolutely. I'll have more to say on cotton and the coffee.
You showed cotton. You showed cotton.
Yeah, and I'll come back to that and give a little more detail because I do have that. But lastly, here for the soybeans, watching on the short time frame, because hey, I'm actively working with clients about trying to build into long positions here, using some of these levels as stops. Of course, you're working with options right now. Buying $14 calls, selling $15 calls against it to give ourselves a reopening to the upside, because a lot of my traders are farmers, and they may have already sold their crop at the elevator for a future delivery. Well, they can come in and use options to reopen that upside right now on these dips if they want to, and that's part of the strategies we're working with. But the downwards, sloping trend line against the highs here, watching that closely here. It also kind of aligns with highs of the day around 1350. That would give us, an intraday reversal kind of setup, in my opinion, happening off of, what is otherwise a 50% long. So we'll see. Let's move on to cotton here for you. And then we can take a look at coffee. Cotton, I got more to say. I've been tracking cotton for this range for months now. In the cotton, expecting it to go higher, right? We've been watching triple-digit heat down in Texas in the Panhandle region. Georgia and the southeastern states have made, I think, a pretty good crop. I think demand is still there for cotton. I'm not a huge believer that we're going to see a major recession in front of us. I think we might see slowdowns and this and that, but there's just so much money out there in the system. It's hard to have a real slowdown when there's that much, when we have printed that much and put that much M2 out there. I think we saw it with.
Then what's wrong with the banks, Daniel?
So, what is wrong with the banks? You mean the actual financials, right? They have been sluggish. That could be a sign that there's another couple banks to fold, but I think we're going to continue to see, just like we saw with the bank failures over this last year, very big banks will come in and gobble them up overnight. The FDIC will flip things and turn things around.
The XLF is breaking down too, so there goes that narrative.
Sure. And there's definitely there's definitely reasons to be concerned, but I think bull markets also climb a wall of worry. Now, that doesn't mean I think we go out and you buy stocks today or stock futures for that matter. I think, you're right. There's a pullback happening, right? And I think there's reason to think that these slowdowns will happen. Markets will pull back. Longs will take profit. Are we going to go into a major recession?
Take a look at Citibank. Sure. Take a look at Citi.
Yeah.
Tell me what's bullish about that, and then take a look at it's worse than the regionals.
Sure.
So it's not just the regionals; it's the money center.
Yeah, and
Daniel, what about the bonds?
Names, so.
How about the bonds, Daniel?
Sure.
I mean, aren't there some things to worry about that it could be more than a correction? Because I'm glad people are saying this is only a correction.
Yeah,
I don't want company.
Yeah. So I think this downward sloping trend line, and otherwise the downtrend in the bonds, right? This is the 30-year bond futures. This represents, for those that don't know, flip it upside down, and it's basically a chart of the 30-year yield. So the higher you go on this chart, the lower the interest rate's going. The lower you go on this chart, the higher the interest rate's going. So we're pricing in right now, and people are still looking for the Fed to continue to with their monetary policy of rate hiking. And I don't disagree. I don't think the Fed has done enough. I think we needed a Volcker Paul Volckers, who I'm referencing here, a Fed chair that, had the biggest, I think, interest rate hikes on history, some of them being surprise rate hikes of multiple percentage points. And that was a way of, throwing a wet blanket on inflation. Our Fed has not done that. They've really eased into this, trying the soft landing narrative. There's always volatility. There's going to be hiccups along the way. But I think we are, when you look at commodity spectrum as a whole, I think we're bottoming on that inflation trade. The stock market has made some considerable progress over the last several months that a lot of people didn't think it was going to do.
True.
And I think we need to acknowledge that we're still pulling back now to test levels we just broke out of. Let's see what it does when it tests those old levels, right? Just like here, let's see what it does when we get down to the 2022 lows for the bonds as well, right? If we bounce from here in the 117, 118 handle, we're just in a 134 to 118 range. That to me just says price discovery, and now the market is very content with where we are in the market. I thought channeling maybe a little higher here. We then obviously found our resistance there, the old support, now resistance, rolled over, broke. What did I just do?
That's okay.
Oh, turned on demand. Okay, broke below that trend line support, right? And then you can see my trend line against the highs there, which I don't know why I removed that one. It didn't remove that, but nevertheless, we're right back down to the lows. We continue lower through these lows. You really got to go out there on the 30-year. In fact, I need to pull up like a monthly chart at this point to see. There we go. We're going back now, right, to some really, really, old levels. And granted, where we came in 2020, that was, quite a considerable swing low, so to speak, I think, for bonds. Yeah. I think the Fed now has given itself a lot of room on this chart, if they need to, create, easing policy, there's a lot of room now for them to do it. There's a lot of room to the upside for the bonds to move, so to speak, if they start, wanting to devalue the currency, buy back bonds, do another POMOs, do quantitative easing like we saw in 2008. Every point this chart falls, in my opinion, is just more ammunition for the Fed for the next, real crisis for them to use.
Okay. And quick look at the dollar that's been relentless.
Yeah, really, really relentless. A quick look via the Euro futures this morning, coming down into that full 50% kind of this last swing up. Been a very, very choppy rally for the Euro currency. And you could say the same for the dollar, the Dixie in general as well. We're starting to break above, and I'll look at the continuation chart here. Daily nearest usually works best. There we go. We're starting to break above a trendline resistance after breaking out above this 200-day moving average. This is a pretty significant, reversal or show of strength for the dollar. We need to see momentum continue. Yes, up. And, watch this 18-day moving average for the short term, trend higher. We reverse this, and this becomes a 1 or 2 day fake out higher. We get back below these levels. When you take a bigger step back, you have to realize the significance of this 102 to 105 area on the bigger time frame, because the dollar really does go into these multi-year, at least when you look at the chart of the Dixie going back to 2000, goes into these multi-year ranges where you have major support and resistances that stick around for this platform here is called commodity. It's by bar chart.
Okay, you want to give quick coffee opinion for Richard, and then we'll wrap it, Dan.
Yeah. So anyway, just to finish the dollar here, right? We are coming down to test old resistance as support. This could be a show of reversal for a swing higher and setting into this new range above 105 to 115. If not, we fall back lower below 100. We're back to this old range. It gets pretty bearish. Yeah. Let me throw a quick coffee chart up here.
Is it decaf or?
Yeah. So September coffee, looks a lot like cotton in a sense that of this daily range that we've been in. over the last several months. Yeah. And kind of pulled back against a much larger low. We have a double bottom in coffee. And I think this key reversal that we have going on today, in other words, we had this inside price action for a couple days and then now pushing higher above 3 days. Look for resistance up around that 18-day moving average of 156, but you break above there, you open yourself up for reversion to the mean here, back to the middle of this range, back to the 200-day and 100-day moving average around 171. And yeah, you're just coming off of a double bottom. We've been all the way up to 200. So there's probably a bigger range here for coffee, so long as we stay above this low. We're out of daily oversold conditions. This chart looks like it's, not saying I'm super bullish coffee, but if I was short, I'd think about taking profits and looking to resell a little higher. If I was long, So we'll see. Eye. Yep.
Yeah, we have some good traders in here. Okay, so Daniel, best way, this is how you reach Daniel. He's out of Chicago.
That's right.
His Twitter. Okay.
You can always find me on Twitter, on what's it called? On Facebook. Let me bring that back.
You mean X?
Here.
Yeah, I
X. Yeah, you're right. I'm never going to get used to that. There's my information, 312-277-0110. Just give me a call. You can find me on Twitter, Facebook, shoot me an email. Throw in a link in here. You can also feel free to sign up at I'll figure out how to get it in there, but you can sign up for our daily call-in. If you ever want to hear from us, it's totally free. Our chief market strategist, Ted Seifert, gives our daily opinions on all of these markets. But all of that and above, love to talk to anyone about commodities and futures trading if you have any interest in it. Dale, thanks as always for having me, and it's been a complete pleasure.
Yeah, it's kind of a rare thing nowadays. I used to do what Daniel did as having my own IB or being a commodity broker, but to have a full service guy like Daniel Hussey Jr. For your commodity trades and everything else, kind of the last of a dying breed. So they're not easy to find. So
it's always a pleasure working with clients and helping manage risk and create trade plans with people, right? That's you're the captain of the ship, we're your first mate and navigator. There's a reason, right? We're here for you.
Yeah, full service, discount commissions.
Everything in between.
All right, Daniel, thank you very much for being here, my trading warrior brother, and have a great rest of the summer and fall, and we'll catch you later on in the year, see how things played out, see if the beans get to the 20s.
Yeah, we got to get to 16 first, but I would look out over this next couple of weeks. People look out for that rally to continue, probably form some kind of harvest top. Then into and through March of next year, I don't think that's out of the question. They're already paying $20 a bushel in China. So
all
right, have a great day, everybody. Thanks a lot for having me.
They'll buy it all. All right, thank you, Daniel. Adios.
Take care.
All right, everyone, thank you very much. Don't just count your pips, count your blessing. Richard liked your analysis, and thanks for taking questions. And you could join the team in 12 minutes on the Morning Edge. We'll see everyone tomorrow. Adios. Thanks, Daniel.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.